Good evening and thank you for joining us on Sunday Interview. I'm your host, Grevazio Zulu. Now, in a liberalized economy like Zambia, the private sector plays a critical role in ensuring economic development and growth. The sector, particularly the small and medium enterprises, have the potential to reduce poverty, create employment opportunities, and uplift people's living standards. But can the private sector perform its role effectively in the wake of challenges such as high inflation rate, high interest rates that lead to lack of cheap finance? My guest tonight is Jacob Lushinga, Managing Director, Development Bank of Zambia, an institution established 44 years ago with a mandate to make available long, medium and short-term finance and equity investment for economic development. How well has this been done? Mr. Lushinga, welcome to the program.
Thank you.
Over four decades of existence, is there much to show by the bank?
There's a lot to show. Obviously, the bank has gone through cycles, of ups and downs. I'd say this is a cycle that is on the upside in the bank's history. We've had a rejuvenated development bank in a long time. We've had government coming on board and recapitalizing the bank with a lot of money, I must say. So we are making an impact on the economy.
Someone can argue that the impact has probably slowed down or dwindled as compared to the past when the bank was set up. That's from 1972, 73, 75. The impact was bigger then than now.
Yes, one would have to admit that. Obviously, looking at the bank's size in terms of the capital base and the growth, as compared to the growth of the economy, both in terms of the population, in terms of the GDP. So as a percentage of today's GDP, we would say the bank's size is much smaller than it was, say, 15, 20 years ago.
So where did we lose it?
The initial hit was from the financial meltdown, really impacted negatively on the bank. Now, this came out of the enterprises that were financed by the bank failing to repay the loans to the bank. Obviously, that meant the bank was failing to meet its obligations as well, and that downsized the bank's balance sheet.
Let's look at your mandate. It states as follows: we are committed to tackling poor and costly access to capital for investment and removing micro-level structural rigidities that hinder public and private investment growth, productivity, wealth, and employment creation. This is an ideal statement, very ideal. Are you living up to the statement?
Ideal and practical, yes, we are living up to it. If you look at our cost, of finance, you find that we're cheapest in the market. We are less than the market rates. That's deliberate. That's government's way of intervening in the markets so that we ensure there is a low-cost finance to the people that need them, to the Zambian enterprises.
Now, I know that not too long ago, the bank really faced serious challenges of lack of adequate capital. And we had, of course, commitments from government to restructure and recapitalize the bank. Where are we now?
The bank's capital base stands about roughly about $70 million US. The bulk of that is coming from government. Exactly $76 million is a capital base of the bank today. The bank was capitalized through provision of assets. These are loans that had already been advanced through the Enterprise Development Fund of the government. So that was about $49 million worth. And that was given to the bank as a way of capitalizing it. In addition to that, government pumped in over $20 million, $20 million in terms of cash, and an additional asset of about $3.5 million in terms of equity shareholding that the bank now has in another development finance institution based in Botswana, Northside Finance. You might have heard it. So the DBZ owns shareholding in that institution as a part of government's effort to boost the bank's capital base.
When you break down those, they sound like the now investments. So probably one would be right to conclude the bank was almost as good as closed before that?
Sadly so, yes. We had less than $7 million as capital. Now, this came out of what I talked about earlier, the bank failing to collect due to the meltdown, financial meltdown in the early 90s, about 92, 96, somewhere there. You know, there was a lot of default. And most of these loans are not yet paid to date. So what the government did was hive off the toxic assets, so to speak. These were bad loans, and they were taken over by the government through the Treasury so that we could have a clean balance sheet. It became much smaller, less than $7 million, and then government started the effort of recapitalizing the bank.
Now, one other issue that we probably need to look at is the aspect of restructuring, putting the right people in the right places, making sure that the bank has the right people to work and plan. Are you there now?
We are on our way. The bank's restructuring was in two folds, you know, the financial restructuring that I've talked about, the balance sheet being cleaned up, and then restructuring the bank's most precious asset, I would say, which is the human capital. There was an effort to now ensure the bank's position in the economy was at the right place. And so there's been a restructuring of the bank in terms of the skills and experience. There was, I must say, I joined the bank myself in 2011. That's about 3.5 years ago. With that came the actual restructuring of the bank. And so out of a number of 13 people at the time I was going to the bank with less than $7 million, we've grown to over 58 now, you know, with $76 million. So you can see both in terms of human capital and the financial resource base, there's been growth. It's not complete yet. As of now, we are looking at resourcing the bank with the right skills, with the right experience. We are putting a risk management framework, risk management based lending as primary, and so we're looking at people that can come and bolster the bank's operations from that sector. You might have been seeing DBZ in the newspapers of late looking for the right human resource.
So when you talk about projections, we're looking at what period, from when to when people can say now the bank is in the right place, right position, and moving the right direction?
I would give us another year, you know, a year and a half. We have a strategic plan for the next 3 years, which now is almost at 6-7 months along the way. So I would say by the completion of the strategic plan, you see a more reinvigorated DBZ. You see a more robust bank trying to ensure we impact on the development of the country.
For a developing country like Zambia, development bank is supposed to be a very big bank, but now it looks like a very small bank.
You would say so, but that also is comparing to the size of the economy, the size of the country. We made mention of China. China is a very big country economically. You know, the Chinese Development Bank has more capital than the World Bank, just as a comparison. So it would be unfair for us to compare ourselves to the likes of China. We need to compare ourselves to the growth of the Zambian economy, and we can compare to the region, for instance. Arguably, we are bigger than the Tanzanian Investment Bank. We are bigger than the Zimbabwean bank and the Namibian one. So, you know, those are the sort of sizes we can be looking at. But more importantly is to compare the size of the bank to the size of the economy, because that's what we're trying to impact the Zambian economy.
At the moment, you would rate it as good, average?
Yes, I'll tell you something. We had an A+ rating from the Association of African Development Finance Institutions last month. Just an indication of where we're coming from, how far the DBZ has grown, both in terms of economic impact and human resource. The Association of African Development Finance Institution is the only association in the continent which rates the performance of development finance institutions, and DBZ was put at A, plus. So that, to me, we were coming from a level of less than D, within the last 3 years, and we've grown to a level where we are making an impact and we're being recognized.
So what would you say are the good practices that others should learn from in growing an institution like yours?
Well, it's critically two things for an financial institution like ours. It's the human capital, very, very critical, disciplined, well educated and well experienced personnel, a team of professionals working towards one goal as a team. The other one would be the financial resource base. For us to have an impact on the economy, we have to have the right amount of capital to work with.
Now there's another argument on the other side, people debating and arguing that for your bank to fully function and to grow at the level that you want to, there's need for finances from institutions like NAPSA, ZISC, and pension funds to be channeled to the bank. This is feasible.
I think that's right. And if you know the structure of the Development Bank of Zambia, it's actually owned by public financial institutions. NAPSA is one of them, the Zambia State Insurance Corporation, and Zanaco. These are actually the Class A shareholders, in the three plus the government. According to the DBZ Act, they should own no more than 40% of the bank. More than that, NAPSA has come on board this year to give us working capital in form of a loan of 50 million kwacha. So they are also responding to our efforts and helping us with more than just the equity that they've injected in the bank. The other shareholders are international financial institutions, the Development Bank of Southern Africa, the Exim Bank of India, and the European Investment Bank, who are actually on their way to pull out. They are minority shareholders.
Did you say they're on their way to pull out?
Yes, of the bank, yes. For strategic reasons, they want to concentrate on helping supranational development financial institutions like the ADB and the PTA Bank, rather than national development finance institutions. So they've offered to sell their one share, by the way, they only have one, to the government. So there's a share buyback structure.
The government has been pushing to reduce its influence on the bank and its shares, and then the minority shareholders want to sell to the government.
Yes.
Fitting the purpose?
It conflicts with government's strategy. Government deliberately wants to remain small in the bank so that there is an opportunity given to international financial institutions, for instance, to bring in capital, to bring in investment into the bank, into the country. The European Investment Bank have their own, sort of focus this time around. So they're looking at, rather than financing a development finance institution. They would want a national development finance institution. They would want to concentrate on the big ones.
So besides NAPSA, do you have any other shareholders coming to your rescue, coming to your aid as a bank?
Domestic ones? No.
Yes, domestic ones?
No. We've been talking to people. We've been talking to stakeholders, development finance institutions outside the country, and including the Chinese, who are willing to come on board in one way or the other.
It's been difficult to market the bank locally?
Very difficult, yes. Very difficult. You see, it's the nature of our business. We are not profit motivated. Okay, we are trying to impact on development, wealth and job creation. For us to be able to do that, we have to provide finance that is cost effective, that is lower than the market cost. What that means is our profitability is very low and minimal and unable to attract private investment.
One of the tasks given to you by government is to lower the cost of doing business. Are you living up to that?
We're striving to live up to that. Very difficult circumstances, given the narrow, capital base that we have. Part of the things we do is to invest either in enterprises through equity, or provide technical and advisory, support to these institutions. Now that lowers the cost of managing most of these enterprises, apart from provision of low-cost finance. So yes, we are striving to live up to that.
What is the relevance of your bank? Would really the country be worse off if it was closed?
Yes, we're talking about a promotion of small and medium enterprises. Now, worldwide, small and medium enterprises are have the greatest impact on economic growth and development. They have the greatest impact on innovativeness, and creativity, as well as entrepreneurship in a country. If we stop supporting that, it means we are stopping the creativity that is brought in the business activities. That means low productivity, both in goods and services. Nobody would want that. It should be the other way around. We should look at growing the size of the bank to a level where activity is enhanced.
We are still seeing a lot of businesses, a lot of companies complaining about high interest rates and still borrowing from commercial banks and the open market. Mm-hmm. Are you failing to meet the expectations, the SMEs?
We are failing to meet the demand rather than expectations, because the demand is overwhelming. I'll give you an example. We had government again come to our aid and give us a line of credit through the proceeds of the Eurobond. Before the money was credited to the DBZ, without advertising, all of that money had been subscribed to, had gone in terms of applications. That's how overwhelming the demand is, and for a good reason. We provide very cheap financing to the market.
At what rate?
Our current rate is a margin of 9 over the Bank of Zambia policy rate. That is about 10 to 15% less than a commercial bank.
Are you able to survive on your own? I know you've spoken about a lot of government credit lines coming your way, and not much about yourselves surviving as a development bank of Zambia. Are you a bottomless pit? Sure.
No. Sustainability is at the core of the Development Bank of Zambia. We want to ensure this time around we survive on our own. This is how we're doing it. We are discussing, negotiating, and contracting lines of credit other than what has come from the bank, from the government. We, for instance, have $30 million that has been approved by the Chinese Development Bank coming in. As a matter of fact, that's been a long-standing, amount that is now been given to DBZ. We have 20 million US dollars approved by the Industrial Development Corporation of Southern Africa, which we are about to deploy. These are our own efforts, privately as a development finance institution that we have made. Currently, we are in negotiation with the African Development Bank, who have indicated strongly that they'll be able to provide us with 50 million US dollars, and that is our own effort. You might have heard of an institution called Shelter Afrique. This is, as a matter of fact, a subsidiary of the African Development Bank with the mandate of providing finance for development of housing in the country, in Zambia in this case, who have come on board with a pledge of 4 million US dollars. So we are making all these efforts. We are talking to Afro-Exim Bank, who are also processing an application from us of 30 million US dollars. The idea is for us to be able to have enough working capital to deploy in this country so that we can impact on the economic growth of the country.
Off the top of my head, we're probably looking at close to 200 or 300 million dollars coming into the bank?
Yes, within this year, as a way of boosting SME financing.
That's a lot of money.
That's a lot of money, yes. And remember, the expectation of the public is for us to be able to impact on especially the costly financing, that goes with commercial banking, finance, for instance. We hope to do much more than that in the coming years. For us, this is more of the beginning of a new development bank of Zambia.
So, how would you describe the impact with examples? If somebody asked about the impact, you've spoken about the $20 million from the Eurobond, $50 million from NAPSA,
right.
And we expect more money, of course, from other financial institutions that applied for. But let's look at the impact, tangible impact.
Yes, exactly. I'll give you an example of the projects that we have financed, just so that you have an idea. Do you know Chaminuka Hotel, Lodge? That was financed by Development Bank of Zambia. There's the shopping mall in Kitwe that the president has just commissioned. That was financed by Development Bank of Zambia, and the NAPSA now, have taken over ownership of that shopping mall. There's another shopping mall, the only shopping mall in Chingola, that was opened this year. That was financed by Development Bank of Zambia. You've heard of Oriental Quarries, probably arguably Lusaka's biggest producer of building materials. The cement plant there was financed by Development Bank of Zambia. So this is but a few projects and examples. In the hospitality industry, Mukuba Hotel in Dola, it's an old project, but that was financed by Development Bank of Zambia. A few hotels in Lusaka, lodges, including Nomad's Court, has been financed from the Eurobond proceeds. So we are striving, we are making an effort. It's not going to happen in one day. We look about long-term development and long-term capital financing, so it will take a little while, but we are there. At least we're on the right path.
How do you change the perception to many that you probably don't exist?
It will take a lot of effort on our part to prove that we're a credible institution. We can finance a project and get back the money. Now, that also means it's in partnership with the people that we're working with, business enterprises, meaning we have to select projects, we have to select people that we can work with that will be able to support the credibility of the bank.
I'll give you an example. People will argue probably that when you look at construction, for instance, the contractors that come into Zambia from other countries have serious financial support from their development banks in their own countries. We do not seem to see this. If people say if we had a serious development bank, we would by now have a lot of serious road contractors and other contractors working on construction projects around the country. You're failing to back up their demands for loans, their contracts?
We are backing them up. I think probably what is lacking, what we need to do more is probably to blow our own trumpets. What you talked about, to tell the nation that we've done this, we've done that. I just talked about Oriental Quarries. They are big road contractors. We finance the procurement of machinery that they're using now to contract, for road construction. There are a few contractors that have approached the bank that we are working with. Remember, it's about a partnership. First of all, they've got to know what we're doing. That is our effort. But they've got to approach us. They've got to apply for us to be able to support them. But more importantly, they need to work with us. When we help them, they need to bring back, the money that they've borrowed from the bank so that we can roll it over and finance other projects.
Does it mean that the fact that we do not have so many people that have really outgrown the SME status, is that an indictment on your bank?
No, because that is our business. Our focus is on SMEs.
Who should grow out of that?
Who should grow out of that, yes. And a few are growing out of that. It takes a while. It takes the economic environment to be able to support the growth. But there are a lot of other factors that should ensure growth of SMEs. I mean, there's a question of proper coordination within these SMEs. By that I mean management, both in terms of technical and financial management of the SMEs. It takes a while for people to understand, appreciate that a business is not a jackpot. It's work, and they've got to work for it to grow out of that.
Let's look at how you distribute your loans. I know I'll get back to the issue of shares in the bank, but let's look at the issue of how you distribute your loans. When I look at your status, reading your reports and read your website, it clearly shows that about 78%, close to 80% of the money goes to Lusaka and the Copper Belt. Is that a fair distribution?
It's not a fair distribution at all. But that is skewed to the country's development. If you notice, it follows the line of rail. You can add Livingstone, and the rest of the line of rail. This is where the majority of the business enterprises are domiciled, and it makes it easier for them, to approach the bank. We are deliberately following a path of going outside the line of rail. Now that is difficult because the enterprises that are there are small, very underdeveloped, and will be looking for very small amounts of money, which becomes a very high cost administrative wise to be able to do that. However, we have projects in Chipata. We have project in Northwestern Province, in Munilunga, in Ikelenge, if you know where that is, right up to the corner of the country, Northwestern Province. We have a big project there, a processing of pineapple into juice, a plant that is being set up by Nchila Wildlife there. So we deliberately go out of the line of rail following the business enterprise.
You could mention all these, but clearly it seems the fact about rural financing and development is not on your agenda, really.
Yes, it is.
Looking at the statistics, we're talking 65% Lusaka, 13% Copper Belt, and the others have 1%, 2%. That's not really a very good picture.
It's not a good picture, and that's why I'm striving to get out of that. But you should note that it's not in terms of the number of projects, but it's the amount lent. People in Lusaka run bigger enterprises, run manufacturing enterprises, and therefore 2 or 3 projects could take a very big chunk of that percentage. Whereas in the rural areas, it's small businesses, In terms of distribution, you might blame that on the skewness of the development of this country. Like I said, following.
Are you not supposed to change that perception?
Yes.
Change the map and the outlook?
We are changing, and that's why we have a project in or rather projects in Kasama, in Mansa, in Chipata, in Choma, and the rest of the non-traditional, urban areas in the country.
Do we have more projects here, because this is where the powerful are and people with the money are, and they can lobby and they can walk to your office easily?
No, well, yes and no. I would say no to the fact that this is where the people with money are, and therefore the people who are coming up with big projects. I don't know about lobbying, because our system does not react to that. Our system would not respond to lobbying, because we have a project appraisal system that looks at the viability, both financially and socio-economic wise, of projects, to ensure that we select those projects that with the greatest impact on the economic development.
Are you financing suppliers, consumption?
Yes. Yes, we do.
Not really the projects that are supposed to have a long-lasting impact?
We finance with short-term activities like trade finance. Those are 30, 90-day turnaround projects. But our focus is on long-term plant and equipment support.
Are the rural people disadvantaged by the way you have defined small and medium-scale enterprises? I know you want them to be a registered company. That's one of your demands.
Right.
Annual turnover of between 6 and 93 million.
Yes.
And they must employ up to 300 people. Isn't that too much? Isn't that too strict?
They must employ between 10 and 250 people, but that's just a definition. We support micro enterprises indirectly. The government has given us a line of credit of $4 million specifically for rural finance, for intervention in the rural areas. The size of the bank, I just told you we've got 58 people, would make it very expensive for us to directly go into the rural areas and conduct project finance there. But what we do is work with other participating financial institutions, the National Savings and Credit Bank, which has a very wide network, for instance, negotiating with us to be able to deploy some of this money in the rural areas. Now, we've done that before. We are doing it again. We work with other smaller microfinance institutions. ZAM is an example, and that can then break the big amount of money to smaller enterprises, so that we are able to lend small amounts of money. And so we're making that effort. It's just that we have to work with the network that we have in the country to be able to reach the rural areas.
Just look at your impact again. Now, in terms of job creation, are you able to estimate within 1-2 years how many jobs you've been able to create?
Oh yeah, last year alone, our annual report is indicating 709 people or jobs created within the 12 months last year. And this is deploying an amount of 512 million kwacha that has risen from 214 million kwacha that was deployed the year before. I'm talking about 2014. So you understand and you see that we are more than doubling our effort in terms of looking at employment creation. Our focus is not just jobs. We also focus on value addition, of primary raw materials in the country. We also focus on foreign exchange saving projects or foreign exchange generating projects. So we are there in terms
projections for this year.
Yeah, this year is supposed to be much bigger, threefold, in the sense that we've got more capital. The lines of credit are just announced, which we have been negotiating in the last 2-3 years, and now coming to fruition this year. We should have no less than 1,000 jobs created from our activities this year.
That's 2016.
2016.
Let's
yes.
look at the Eurobond. That's one big injection that was given to you by government. Now we're looking at accountability and transparency. How was this money used?
This money was lent to 48 projects across the country, and this was one line of credit that took care of the concerns of the rural areas because it was deployed because of the nature of the Eurobond proceeds. It was very cheap. You only had 2% over inflation. At the time, inflation was less than 10%, was 9%, and so we were lending about 10% per annum, and therefore people in rural areas were able to access this facility because it was cost effective. So we're talking about, it translated in kwacha at the time was about 104 million kwacha, which was split in the 48 projects that we financed. In terms of accountability, as you know, we are a public institution. We are regulated by the Bank of Zambia and the Auditor General's office, who come every year to look at what has been done specifically for that money, and therefore we have the records to back that up, to show that this money was deployed properly. Now, in addition to that, there was an oversubscription, meaning we got more applications than the money that we had, and so the Development Bank of Zambia, out of its own money, we added on to the 104. We added 13 million kwacha from the BZ funds for this particular line of credit to be able to finance the 48 projects that benefited from the Eurobond.
By every standard, people would argue that this is a lot of money.
Oh yes.
Injected into an economy which you said is pretty small. Mm-hmm. The impact should be seen, should be very visible. Are we seeing this movement? Probably not seeing it.
I think we are. In terms of examples, I talked about Nomad's Court. You saw that a Eurobond project. There's a milling plant in Kasama. It's called Kasama Milling, by the way. It benefited from the Eurobond. So there's milling meal being produced. Beyond that, by the way, we did get more money from the government. We got another $20 million. I'll talk about that in a little bit, but it was a specific fund. And so examples of the Eurobond are there, you know, people that got the money and are using it. And the majority of them are actually bringing back that money to the bank, and so we are rolling over that facility.
So why is the economy not really changing? We have all of these people benefiting from this huge injection of capital. $40 million?
Right. You've heard of
$90 million?
76 in total.
I would say you've spoken about the NAPSA funds.
Right,
50 million,
right, 50 million kwacha.
And then you got 20 million from the Eurobond.
Right.
And another 20 million from government, which
yeah,
you said you would talk about later.
Yes, exactly.
Plus your 13 million. We probably talking over $100 million.
Close to $100 million.
Thrown into the economy.
Yes, yes.
What is changing?
Productivity is changing, output is changing, people are producing, service delivery is there, infrastructure development is there, as you've seen. I don't know where this negative attitude or stance from people comes from, because, I mean, we've seen growth. We are not blind. You know, we've seen things happening in this country. Yes, of course, we want a faster rate. We want more. We can't wait, but that's because we're coming from a background, you know, of very low levels, and we're moving as an economy. We are working.
You did say you were going to talk about the $20 million.
Yes, it's part of the government's effort for infrastructure development. You've heard of the Zambia Cooperative Federation, $20 million in solar milling plant. That's a DBZ facility administering through the Zambia Cooperative Federation to be able to process a milling meal at a very cheap level. Now, that is having an impact on this economy. People are accessing a milling meal at very low prices. Now, it started this year. A few months down the line, we should be able to see a bit more activity. The Development Bank of Zambia is managing that fund on behalf of government to be able to procure the milling plants. That is more than just an infrastructure project, because it's going into the processing of agro products.
Do you divide this money by sector when you're giving the loans?
Yes, yes. As a matter of fact, deliberately we can't lend more than 20% of the bank's portfolio to any one sector, even though currently the biggest amount has gone to the manufacturing sector by size and not the number of enterprises, followed by agriculture and construction.
It's a deliberate move?
Yes, yes, to be able to impact the right sectors in the economy. Our priority sectors comprise agriculture, manufacturing, mining and industry, and tourism. Not in any order, but following closely the Sixth National Development Plan. As I said, as you rightly pointed out, our mandate is to support government's effort in growth strategies. So we work as a catalytic agency for government to be able to impact growth in the economy.
Let me move you to issue of recoveries. You do not seem to be doing fine in some areas. The examples that some of them captured in the Auditor General's report, like KIFCO, where you failed to collect 17 million kwacha.
Right. In some areas, yes, like you rightly said. I don't know if I would call it failing on the part of the bank or failing on the part of the borrower to repay what they've taken from the bank.
Probably on the part of the bank, because probably you didn't do a due diligence.
Due diligence has nothing to do with recovery rate. There could be a project that is working very well. KIFCO is a good example that you've given, where the money was deployed, the machinery is there to be seen, but the project lacks working capital, which the bank actually came out now to support KIFCO. That was the query in the Auditor General's report, because what we did was to restructure the project in a way that we give them more time to pay. We convert some of the debt into equity so that the burden of the project to repay is lessened, but also the bank has a tighter control of KIFCO right now, because we own 25% shareholding in that company. It means that the bank has a say in the management and the use of its funds at KIFCO. It is not something we like doing, but we look at the projects, their contribution to economic development. I must say KIFCO, second from government, should be the second biggest employer in Kabwe. Now Kabwe is a depressed economy, and we wanted to help rejuvenate that economy, and that's how and why we restructured. But there are other failures, admittedly, in terms of recoveries. Like I said, the failure is mostly on the project for various reasons, including bad management of the projects.
Would you call that probably a bad culture of repayment among Zambians, businesses?
There are a lot of factors that contribute to that. That could be one of them. But it would be unfair to say every Zambian does not want to pay back what they borrow. It would be unfair to criminalize our culture, that we have a culture of not wanting to pay. I think it's a lot to do, first of all, with the size of these enterprises. It's got a lot to do with the planning, in the projects. But there are instances where the market fails. A project starts producing a particular product. envisaging that they'll sell everything they produce. Then suddenly people do not buy that product. The market fails the project, and the promoter or the enterprise has difficulty to service the loan at the bank. So there are genuine cases where we need now to go in as a bank and work with the people involved. So it's a mix of factors.
Roughly, when we look at defaulters, we're looking at what percentage?
For the Development Bank of Zambia, it's 22%, which is pretty high, very high.
Very high.
But it's lower than the industry standard. You must know that the development finance standard is 25%. But when you get to 22 and a half, you start getting worried, because we ought to be less than that. And that's what we're striving to. For instance, in our strategic plan, our target for this year is to have less than 15% default, on our loans. I hope we can achieve much more than that, to be less than 10% as we close the year. And it's through efforts of working with these enterprises that will make us achieve that target.
Do we have defaulters in court?
Yes, we do. Yes, we do. More than 5 as I'm talking. The bank, as you know, strives to totally recover the loans that people obtain from the bank. And so sometimes we pursue these through courts of law. Sometimes we work with enterprises where they are cooperating. There are a few cases that we have put under receivership so that we can collect what is owed to the bank.
Now, I want you to look at the current economic environment and how it is impacted on the SMEs. Are they able to survive? There's so much gloom talk, and you're coming from the bank.
Yes.
You've done investment before.
Yes, I've done investment most of my life, and I know that a good businessman ought to survive. Even in this environment, it's not that bleak. We've been in a worse environment before. I don't see why a businessman should cry. They should look at their products. 2 things, their revenue and their cost. They should reduce their cost structure, but they should look at pricing their products or services accordingly. So there's no reason why an SME or any enterprise could cry to a level that because of the current economic environment, I'm failing to pay. No,
where we have high inflation, where we have interest rates that are high.
Yes, in that environment. We've had an environment in this country where there's been inflation going over 200%, and people survived. Now, it's not an ideal situation, and I'm sure the government is working to ensure there's stability in prices. As you've seen of late, with inflation stabilizing, currency value stabilizing, that's an effort made at a macro level, but on a micro level, as a business person, you need to stabilize as well. You need to plan accordingly. So whereas I'm admitting that some factors, inflation, like you've mentioned, the price of capital, the price of money has gone up as shown by interest rates rising, I'm saying a business should try and adapt to the environment. If you don't adapt, you are not likely to survive.
As we close, your vision when you joined the DBZ way back 2011, 2012, was that you wanted to restore the bank's competitive performance and make it Zambia's premier finance institution. How do you rate your journey? Far from the goal?
We've strived, and I think we've scored a lot of successes. We started out to be the premier, development finance. And I think we reached that goal. So we looked at our vision again. We looked at our strategic planning efforts, and we reviewed, and we thought we've reached a stage where now we need to entrench the successes of the bank. In other words, to sustain the good performance of the bank. Right now, the vision has slightly moved to to be a preferred development finance institution. And as you rightly pointed out yourself, we are oversubscribed by demand in terms of loan applications. To me, that's just an indication that, yes, we are not there yet, but we're moving in the right direction over time, where the Development Bank of Zambia becomes the preferred development finance institution.
Mr. Lushinga, thank you so much.
Thank you very much.
You've been watching Sunday Interview. Our guest tonight was Mr. Jacob Lushinga, who is the Managing Director for the Development Bank of Zambia. I'll be back next week at the same time with another exciting topic. Pleasant viewing.